Good evening, everybody. This is Johnny Seville from ACOR Wealth, and this is your executive summary for stock setups for tomorrow, for Wednesday. And let's have a quick look at the markets now. We are in a very interesting position. We had open range set on Friday, which was a low of 1902 and a high of 1918. Now we easily broke through that in Monday's trading on lower volume. So we had a kind of a key breakout, but not a lot of volume that went with it. Only 4 billion over Friday's 4.15, previous day 4.45, and the day before 5.02. So we've been dropping volume every day as we've kind of built up into this level. Today only 3.89 billion. So volume is becoming lower and lower as this move has as we've continued up here. Now, but we definitely broke through open range, and that's obviously something we need to be cautious of, which would signal that we should have a long bias and that we would close above or within or above this range come the end of the week. So what's come the next open range, I should say. Now, remember that the open range period right now is only limited. We've only got 1, 2, 3, 4 days left of open range. Now, this coincides with the fact that we are right here in this resistance zone coming down from the 50-day moving average as well as the top of this candle. So it's entirely possible that we could find ourselves just trading between 1900 and 1950 here back and forth throughout the week until we set a new open range come March 1st. So that's one interesting point. Now, the other thing about what we've got on the upward bias in the short term here is we have the corporate high yield bonds, HYG, have turned positive in the money flow. So we have a downward channel and a positive divergence on the money flow. So that's a warning sign that there's a potential bullish move ahead. Again, we've got resistance up here at the next moving average, and you can see the downward channel here. But it's a very interesting kind of game of chess, really, with the levels of resistance and support that are right overhead, as well as the open range on the S&P. But so right now the odds look to the upside, but there's still obviously many problems ahead. One of the interesting things I was reading over the weekend is despite that short-term potential bias, when we look at where equities have been going, this article or research was published by Bank of America Merrill Lynch, found that the last 7 days that ended last week Wednesday actually saw the largest outflow from equity funds of any week in 5 months, and also marked the 7th consecutive week of equity redemptions, which is the longest such streak since 2008. So you can see the chart here basically representing the exodus of the outflow from equity funds, only matched since what we saw in the plunge of 2008. So very interesting to see there. So there's obviously a cross current of data that we're seeing. Of course, consumer confidence slammed the numbers slammed the market today, as well as the attempt to kind of freeze oil prices or production, seemingly being ignored by Saudi Arabia and Iran. So we've got an interesting kind of again cross current. So the next few days are going to be extremely important in terms of dictating where the market direction will go. So it's kind of again going to be a week where we don't take any really heavy trades, or we're just going to be looking at very short-term positions. In terms of some of the recent stocks that are worth mentioning, we had ABCO, which was one of the ones we alerted as a short last week for alerts in the executive summary. ABCO, we were looking at the June $35 puts, and we had a nice move down there on Monday, down 1.7%, down another 1.3% today. Also, of course, we said valid as a stock trade, and they reported after market today, and they have missed on earnings, which will be a huge win for anyone holding those options or any kind of options at all in the put direction. They're currently down 7.83% after market, so down to $33.45. So we're going to be coming right down into this area, and I'd be looking at taking profit in the morning on anywhere around there. We'll probably find that we might get support right around the $30 area. But would I be happy holding longer? Yes, but I'd certainly make sure I'd be taking a big chunk of that profit off the table. And as you can see, we'll just go out a little bit further. The next level is all the way down to 20. So, but the 61.8 Fibonacci retracements, the key level that stocks will often have key reversals at, or at least we can find some support. But then the next level would be 20. So again, a big win there, and they've obviously reported very much in the favour. And as you can see, selling off even in the midst of the rally in the last 2 days. Again, why we focus on individual stocks rather than trading the market. Also, just a little advisory. CRM does report after market tomorrow, something that we're holding puts in. Now I'll be looking to see how this plays out tomorrow, how the price action is looking. Obviously, it's holding underneath the 64 resistance very nicely, but has broken the moving average. But as you can see, this has been an oscillating move versus a momentum move. So not as concerned with the moving averages as we normally would be, and may have just slightly even broke down beneath it today. So either way, I'll be looking to reduce my position going into the earnings announcement, but CRM, just as a warning, does report after market tomorrow. Okay, we'll have a look at just a couple other ones. ALNY, which I'm still holding half my position in that we originally got into, has been also holding up very, very well in terms of the short direction. It's rolled underneath its moving averages, so I continue to hold that. Red Hat, which I've mentioned, I'm still holding some longer term puts in. That hasn't been able to enjoy as much of a rally also, so still some pressure under there, respecting that resistance. CASY, another one of the stocks from last week's executive summary, that's also holding down underneath its moving averages after breaking support. You can see again the money flow is quite negative, and that hasn't had much of a rally at all. In fact, in the upward break yesterday, in fact closed right at the bottom of the range with a very reversal type candle. 467,000 shares trading yesterday, only 352,000 today. And then also, of course, TYL, which I hold puts in. This unable to really get much steam also, as you can see, making lower highs and lower lows, closing right at the bottom of the range today at 120, with money flow dropping dramatically. So TYL also looking really solid on the from the short perspective. A couple of ones that we've got on the watch list. Is XLRN, which is a pharmaceutical stock. Also waiting for this one to break down, but this has been on my watch list for quite a while, and it had a rally back up, as you can see, and this may be about to break the trend line. You can see we've got some horizontal support coming in there at 24. Okay, right around that level. And we've got the trend line that we are looking like we're just about to break down through. So this one's on my watch to see if this market breaks, then this could we could have a crack down to some much lower levels. But that's one just on the watch list for now. And the other one, also a pharmaceutical or therapeutic company, ACOR. Now these guys also on the watch list, but we've got quite a few shorts. So these ones are just a watch for now, just simply because I personally am already fairly heavily invested in the short positions. But one for your watch lists. On the long side, we have BITA. Now these guys don't report till March 10th, before market open, and they've had a half decent rally here. And just coming up, this was one of the fallen angels that was alerted on February 16th, and you can see it's rallied up and has pushed kind of through this horizontal level. It's being challenged by the 50-day moving average right now, so that's going to be the main kind of obstacle it needs to overcome. And as you can see, the money flow just trying to challenge the zero line, not quite yet breaking through, but that's pulled back, and we can see that it's down to a battle between the 9 and 50-day. So a pullback to the 9-day moving average tomorrow would be a possible entry point. That would give us a 10% move as it would hit the 50-day moving average, and that could be a nice intraday trade just between the 9-day and, or I should say that's the 5-day there at 2032 rather, and up to, from there up towards the 50-day, just under 22. So there's about an 8% potential, very short-term in and out from the 9-day up to the 50, and you can see those are just consolidating there. And then if that breaks through, then that would offer a secondary target right up here to the next moving average, which would be looking at 25.45. And in terms of looking at a stop loss, I'd be looking at the 9-day, which is at 1971. So I'd look at 1964 as a stop loss. Okay, one other potential long. So I give you two short watches and two possible longs. MYCC. Now these guys report before market open tomorrow, but they've had a really good run here from the Twigs money flow. So it may be a bit late to catch it. We've got to wait to see obviously how the earnings report. But if these guys have something exciting to say, obviously there could be some explosive action there. There's we'll have a look at the Fibonacci retracements, just going from the peak of that last turning point down to the bottom, and you can see that we come in here at the 38.2 Fibonacci is where we had that last rejection candle down. You see the drop, the base, rally, and then drop again. So, but still, if there's a possibility to get a reasonable priced entry in the morning, something around where it's currently at around 11:30, assuming that there's nothing drastically wrong with the earnings or any kind of announcement they make. If things are positive, then that could be a nice little pop up to just under the $13 area. So looking at kind of the open of that candle being around 12.75, so looking about 12.73 as a possible target on that. And looking at the 9-day moving average of 10.74, so 10.67. Okay, so there's the and then in terms of a stop loss, yeah, so that would protect the and obviously that's beneath the 5, the 9, and the 20-day moving average. So that is your executive summary for this evening, and of course, again, it's going to be a very exciting week ahead as we challenge the moving average resistances and the fundamentals and the technicals kind of coming head to head more than they have in a while as we go into this kind of contention week. So safe trading, remember your stop losses and all your trading rules, and we'll see you all in the next executive summary. Take care.